Welcome to WARF Essential Topics. I'm Eric Iverson, CEO of the Wisconsin Alumni Research Foundation, otherwise known as WARF. In this video, titled Creating a Startup, Working with WARF Ventures, you'll meet WARF Licensing Manager Michael Carey and WARF Ventures Manager Josh Carson. Michael and Josh regularly work with university inventors who have an interest in creating a startup company. They will share the common questions and answers they discuss with the inventors. WARF Ventures, an early-stage venture fund investing in startups that have licensed UW technologies, may be a resource for inventor entrepreneurs. Thanks for joining Creating a Startup, Working with WARF Ventures. Here are Michael Carey and Josh Carson.
Hello, I'm Michael Carey, Licensing Manager on the IP and Licensing team at WARF.
And I'm Josh Carson, a Venture Manager at WARF, and today we're going to be talking about startup licensing and WARF Ventures. Go ahead and take it away, Michael.
WARF is the Wisconsin Alumni Research Foundation, and we protect intellectual property from the University of Wisconsin-Madison that's discovered through campus research. We then license that intellectual property to industry in the form of contracts, which provide revenue back to WARF, which we share with the inventors on the discovery and also further invest in our investment portfolio to grow our endowment, from which we provide an annual grant to the university that allows for more research to happen on campus, furthering the cycle of innovation. If you're watching this video, you're probably thinking about a startup and a startup of university technology. Here are some questions that we think are important to ask about your technology, about your startup, about the market, and about resources that will help you understand if a startup is a good opportunity for you. Is your technology a standalone product? Can you really form a startup around that technology? Is the market big enough? Are you able to capture enough of the market and differentiate yourself from competitors? Who's going to be on your team? Do they have experience with previous startups, with raising funds with someone like Josh Carson's team? Or do you have other members that can provide valuable experience? How much time and money is it going to take to get this university technology all the way to market? And will you run out of time and money before you achieve that? If after asking these questions, you still feel like a startup is a great opportunity, then we're excited for you, and we'd love for you to forge ahead with that opportunity. So what does a university startup really look like? Well, at the seed of it, there's university research that leads to innovation, which we've covered. That innovation is disclosed to WARF through our invention disclosure process, which you'll have learned in another video. We then protect that innovation and turn it into intellectual property. While we're working on that, you can be working on customer discovery. Customer discovery is where you look into the markets that you're interested in and understand better what is the customer actually looking for. Who is your customer? Does your product or service meet that need that they're talking about? There's a few different resources that can help you do that customer discovery. One is called I-Core, and it's a federally run program that you can either do regional courses through or a national course of, where they help guide you through interviews of customers to get that voice of the customer. Another is a local resource called I2M, which is offered through Discovery to Product. While you're doing that, you also need to be building out your business plan and looking for mentors that can help you build out that business plan. Another resource that I've mentioned already is Discovery to Product, and they can help mentor you through that process. Once you have a good idea of what your business is and what the voice of the customer is, you need to form a team, and you need to form your company. Once you've found your team, you'll need to incorporate your company. One of the resources on campus that can help you with that is the Law and Entrepreneurship Clinic, or L&E Clinic. At this point, you're finally ready to license with WARF. A license with WARF is us providing access to that intellectual property that we created earlier. And I'll cover more about what does the license include in the next slide. You'll also need to think about fundraising. You'll need resources to take this idea and turn it into reality. So let's go back to what is a license. A license is a contract in which WARF provides access to the intellectual property, either exclusively or non-exclusively, depending on what you need. We also continue to manage and further protect the intellectual property, either through patent prosecution, new filings with the US PTO, or international filings. WARF also will manage the enforcement of the intellectual property. In return, your company will provide equity in exchange for the license. You'll provide a share of revenues of products and services that use the licensed patent, which is called royalties. And you'll provide patent cost reimbursement. We'll also want to keep track of how the company's doing and how you're doing with developing the technology. So we'll ask for milestones. Milestones could be in the form of fundraising. They could be in the form of meeting certain government requirements. They could be in the form of filling out your team and hiring key members like a CTO or a CEO. We also want to know specifically how the technology development is going, so we'll ask for development reports. And finally, we'll ask you to set a date in the future in which you think you'll have a product to market. Now, when you're looking to actually find resources for your company, oftentimes there's plenty of resources for early stage development, and there's plenty of resources for growing established products and services on the market. But in the middle, there's what we call the valley of death, and this is where your startup often will land, where funding is scarce, and many institutional investors aren't willing to take on that risk. So you'll need to turn to venture capital funds or other similar funds where they're willing to take on that risk. They're willing to invest in your company in the hopes that they'll have a large return later on. And Josh will cover that later on in the presentation. Other resources that you should be aware of to bring your idea from idea to company formation and beyond, and from experimental results to execution, are here listed on this graph. Many of these resources provide different types of help to your startup. Some are financial, some are in space and other in-kind resources, some are in mentoring or helping you develop your pitch for fundraising. And I'll highlight on this slide that all of the organizations bordered in red and green are either supported directly by WARF, run by WARF, or supported indirectly through the annual grant that we provide the university. And Josh will cover a little bit more about this slide later on. With that, I'll pass it over to Josh Carson to talk more about how WARF Ventures can help your startup.
Thanks, Michael. So WARF Ventures is the venture capital arm of WARF. We invest in startups, ideally hoping to provide a return to the WARF endowment. We assist in raising capital with outside investors to your company, and we give strategic guidance to the company as it grows. WARF has been investing in startups for over 20 years, but since 2019, the WARF Ventures team has formed, and we've significantly increased the pace of investing, both in dollars and the number of companies that we've invested in over the last 4 years. We thought it would be good to give a quick overview of how a venture fund works. Venture funds raise the money that they use to invest from other investors, oftentimes institutional investors such as pension funds, large publicly and private companies, as well as high net worth individuals. They pool those funds together and invest in companies. Then they help the companies grow, manage them through to an exit, either through an IPO or a merger, and then distribute the returns of those investments back to their investors. In the case of WARF Ventures, our only investor, so to speak, is WARF itself. So we are only beholden to the goals and the mission of WARF. Our goal is to create a best-in-class tech transfer office venture fund that supports WARF's overall mission, which you see here on the slide. It's important to note that we have a dual mandate. We need to both grow the WARF endowment through financial returns on our investments, but the second and equally important part of our mandate is to help WARF and UW-Madison technologies develop and make it to the market. So as we're thinking about what companies we might want to invest in, we have to look along two parameters of our mission balance. If a company has a low likelihood of financial success and would not help advance the technology to market, we're clearly not going to invest in that company. On the other hand, if we think the company has a high likelihood of financial success and would significantly advance the development of a UW-Madison or WARF technology, those are the companies that we're going to be really excited to look at and to potentially invest in. We'll also look at companies that fall into the other two quadrants, but these opportunities aren't quite as exciting and fall a little bit outside of our scope. So what do VCs look for? I like to think about venture investing. A good analogy is a race. The technology itself, in this example, is the boat. The market, the surrounding conditions is the race itself. And the management team is the crew of that boat. Everything else is a subset of those three broad categories. And what we like to do as investors is do everything we can to remove risk at each stage of the company's growth. So as we're thinking about investing in a company, we go through a series of steps before we wire the funds. The first is sourcing the deal. We need to find the companies that we're going to invest in. Now, because WARF Ventures only supports technologies that are spinning out of the UW-Madison campus, the vast majority of our deal flow comes from our colleagues in licensing, who are talking to companies at the earliest stage, including even before the technology is spun out of the lab. Once a company has a plan and is fundraising, we perform what we call due diligence. We try to understand every parameter of the company's plan, from the technology to their marketing plan, to their management team, to the other investors that are going to be involved. We trust what the company is telling us, but we verify that everything they're saying is true through independent manner. We identify key risks in the plan. Some of those risks will have already been identified by the company. Some of them we'll identify independently. And then we have a plan to try to manage those risks. We'll share that plan with the company, and oftentimes the company's plan will include ways to reduce risk as they move through the process. We'll think about all of those different parameters that we have just identified and decide if the investment makes sense for us. And we'll let you know either way. Finally, we'll build a syndicate with other investors. Some of those investors you may have already brought to the table, some that we'll may be able to help introduce you to, and we'll build what we call an investment syndicate, which really helps reduce risk further amongst all the investors by diversifying the investor pool, which is a benefit both to us as well as to the company in the case that one investor isn't able to continue farther down the line. Other investors as part of that syndicate might be able to step up and take the place. We'll collectively negotiate those investment terms with the company, usually through a lead investor who takes the primary job there, and then we will write a check. And the company will go out and execute against its plan, and we'll help manage the company, usually by taking either a board seat or a board observer seat at these early stages. Finally, after many years and lots of twists and turns, and a lot of things that have to go right, your company will have an exit. And all the shareholders of that company will get a portion of the returns from the exit. And WARF Ventures will, our portion goes directly to the WARF endowment, which, as Michael talked about earlier, helps steward the cycle of innovation by being able to increase the size of the grant that we give to the university. I also talked earlier about ways that we help support our portfolio companies post-investment. And we've noticed two critical truths as companies try to grow their product and compete in the market. And the first one is that CEOs are really key drivers of success. They are oftentimes founders of the company. They're also oftentimes inventors of the technology, and they are critical to a successful growth and exit. But early stage companies also lack both financial resources, which we are helping to fill that gap, and also non-financial resources that they need to execute against their plan. So one program that we developed early on in the pandemic was CEO roundtables. This is a quarterly gathering of CEOs that allowed them to talk in a safe place where they could share both their successes and their failures with other folks that are in a similar position and share best practices amongst themselves. This has proven to be a really valuable resource that we've continued over the years, and we typically also have outside presentations come and talk to this group, and we've developed a list of resources that we recommend both locally as well as nationally that you can look into as a CEO. We've expanded this program all the way back to our accelerator roundtables. Now, you may have heard about the accelerator program earlier from my colleague Leslie, and we've also launched a roundtable program for projects that are thinking about spinning out of the university. We think that it's really important that faculty and students understand the challenges that they may face as a CEO and all of the key issues that they might come across, and be able to share those experiences together so that we can have companies that are at a better stage when they are ready to spin out from the university. In conclusion, we thought that it would be important to leave you with this slide a second time. This lists many of the entrepreneurial resources that are available to you on campus, all the way from inventing things in your lab through space available to your company when you're ready to spin out and operate independently. If you have any questions about anything that we've discussed here today or any of these resources available, please don't hesitate to reach out to either Michael or myself. We're always happy to help and delighted to talk to folks that are considering startups.